You're watching Singapore Tonight. Telco Singtel and investment giant KKR are set to buy the remaining 82% stake of ST Telemedia global data centers for 6.6 billion Sing dollars. The deal will be one of the biggest data center transactions in Southeast Asia, intensifying the race for compute capacity. Singtel says this move will allow it to be a stronger player in this space and better capture growing digitalisation and AI demand. Singtel will invest $740 million and hold a 25% stake in the company once the deal is done. KKR will own the other 75%, and this will give STT GDC an implied enterprise value of about $13.8 billion. Singtel currently holds more than 4% of STT GDC, while KKR owns about 14%. STT GDC owns a network of 100 data centers across 12 markets in Europe and Asia.
Singtel is really committing to really grow capabilities, not just in the connectivity, the infrastructure space and data centers, but we are layering on REAI, which is our GPU as a service business. This is something I think in the next few weeks you will hear us talk more about it. And then subsequently is also we are building this software to be able to orchestrate across different AI models. And I think this further entrenches our position that we are a neutral party that can service customers from both the Western Hemisphere as well as the Eastern Hemisphere.
And for more analysis, we speak with Hussaini Saifee. He is an analyst with Maybank Securities Singapore. Hussaini, great to have you with us. Now, at $6.6 billion, this is one of Singapore's biggest tech infrastructure deals in years. So why does this acquisition matter for consumers like all of us?
Yeah, sure. Thanks, Angela, for having me. See, data centers are mostly invisible to consumers like you and me. But data centers are the backbone of everything we use digitally. Cloud services, streaming, payments, AI applications like ChatGPT, or even government services. So as consumers, we may not see data centers, but we feel their impact every day in terms of speed, reliability, and security. Now, this transaction doesn't have a direct implications for consumers, but where it matters is that it establishes Singtel as a player of scale in the data center space. Okay, so maybe for the consumers like you and me, we may not have to pay a more higher fee for using those applications, but a bigger and scale operator like Singtel will help us to ensure that we get a more reliable and faster digital services.
Yeah, and speaking of Singtel, the share price rose ahead of the announcement and is also up again today. So is this market excitement justified? And does this deal genuinely change Singtel's more long-term growth outlook?
Yes, investors are very positive about the deal, right? And it's been reflected into the share price. See, the excitement to an extent is coming from the fact that data centers is a fast-growing space. And as you can imagine that data center is driving the boom or the AI boom we see is to an extent powered by data centers. Okay, so data centers is pretty much in demand, and based on various projections, industry projections, the growth is expected to be in the range of 15 to 20% over the next 5 years. So, as such, Singtel is expanding its space, getting excitement. Now, besides this investment, Singtel already is a entrenched data center operator. They have data centers in Singapore, and they are establishing data centers regionally as well. And with this deal, they will have the much needed scale. Now, we heard Arthur Lang, the CFO, just a minute back. And what he was saying is that this data center scale just won't help Singtel to grow the data center space, but will also help it to grow into the areas like GPU as a service or for in simple terms, it is called AI as a service. And Singtel has that layer of AI orchestration, right, where they can orchestrate various models. So Singtel is playing into various stakes, and that is driving the excitement with this acquisition. Now, having said that, post this acquisition, there will be an execution, right? So they have to demonstrate on their side as well now.
Yeah, and as you say, with Singtel scaling, could this deal then make it harder for the smaller telcos or even new players to compete? And does that then risk fewer choices for consumers over time as well?
Maybe I will put it in two parts. So first, data centers and the scale means Singtel is getting the scale. So scale indeed is a competitive advantage, right? And bigger player with scale and access to capital as well as access to power, land, and water will surely have an advantage. When it comes to large enterprises and hyperscaler customers, they surely gravitate to players with a bigger scale and proven track record. Now, that said, data center in ASEAN, not just in Singapore, but within the broader ASEAN, is a fast-growing space,
intermittent connection.
and there is room for...
Yeah, please go ahead, Hussaini. I think we might have lost you there for a bit, but we're fine now. Please continue.
Yes, so sorry about that. Yeah, sure. So what I was saying is that data centers in ASEAN is a fast-growing scale, and there is room for many players at this point in time. And we do see many smaller and large players, domestic and multinational players active in the space. So as such, Singtel gaining scale and with a bit of market consolidation, I don't think it moves the needle. And given the growth potential in the sector, there remains room for many players in the space. Now, from the consumer point of view, right, data centers are invisible to us, or we don't pay directly for the data center services. Now, if the market is cornered by a larger player, then they can charge more for the data center assets, and eventually consumers have to pay. Now, that said, market is far from this kind of monopolization. It remains highly fragmented at this point in time, and there is room for many players.
I'm afraid we'll have to leave it there. I apologize for the connection there, but I've been speaking to Hussaini Saifee from Maybank Securities Singapore.